We live stream, so we have to be on time. So please have a sit. And you got mics here, right? Everybody got a mic?
One. Okay, it's working.
Okay. Friends, please sit down if you wish. I'm very happy to welcome you to our venture capital panel. We're in day 3 of our operation here, and we are very happy about the high turnout of all the guests. And today we are having a panel on venture capital, and I would like to introduce our moderator, Andrey Kolodyuk, who is the chairman of the Ukrainian Venture Capital and Private Equity Association, which is the organizer of this house here in Davos. So, Andrey, the floor is yours.
Thank you, Vasily. It's a pleasure to see you all in Ukraine House. While we're waiting for the speaker, maybe I will share with you, or maybe ask you, because I see some people have been here. What's your experience in Ukraine House? Great. Just great, or just great? Super. Great. So what did you like the most? Did you like the Klitschko brothers reception yesterday? Was it good? Okay, good. So what else you like about Ukraine House? Very busy. Okay. What else? What did you like the most? I mean, the people that have been here before. I'm just wondering. Okay, no Ukraine House before. I mean from Tuesday when we started. What's that? Oh, just a second.
Sorry, I'll take over. So I just flew here from Ireland, and boy, are my arms tired. So we're waiting for one more panelist. My name is Vitaly Golomb.
Please tell me just right in the chair. Right in the chair because we started. Yeah,
there you go.
Yeah, there you go. So, just maybe a few words about the UVCA. UVCA was created 3 years ago. It's the Ukrainian Venture Capital Private Equity Association, and we have 47 members so far. Majority the international funds. And just a few points before we start our panel. You know, by the way, who is actually building the startups right now in this room? Let's start with this. Okay. Any unicorns yet? Okay, soon. Okay, because the panel, the topic of our panel is actually where's the next unicorns. Okay, who is investing in this room? Please raise your hand. Okay, that's a good. So we have like 60-40 split. Not bad. So basically, in our panel, we will try to find out, and I'm going to challenge my panelists in very professional manner to kind of find out where's the next unicorns, because everybody is searching for them for the very pure reason, because once the VC fund funds the unicorn in their portfolio, it will give the good return for the whole portfolio. So that's why everybody is searching for unicorns. So probably we should start, and we will start with the introduction. I will ask my guests just introduce themselves in a sense, what you've been doing, what you're investing in, how you operate, just to give you the idea how we can challenge you after the panel, okay? Because you're investors, so tell us how you operate. So we start with Vitaly. Okay, we start with Nathaniel Krasnoff from San Francisco.
Yep. How's it going, everybody? My name is Nathaniel Krasnoff, and I'm an investor at Wildcat Venture Partners in San Francisco. I'm a recovering engineer and founder, and we look at how data and systems of intelligence like AI and IoT apply to our core verticals like fintech, edtech, insurance, quant marketing, enterprise SaaS, consumer marketplaces, digital health, etc.
Vitaly Golomb, Ukrainian-born, Odessa, Ukraine. Grew up in Cupertino, California. Currently partner at HP Tech Ventures, with the corporate venture arm of Silicon Valley's original startup, HP. Give us a second. I'm sorry about our president. I think that's for him. He's here. President of my citizenship, current citizenship. So we invest at Series A, Series B globally into companies strategic to HP, which is around personal computing, printing, 3D printing, so graphics, imaging, and 3D printing. So we'll talk more later.
Yeah. Nathan, what is your average check? What stage you invest? Just tell us more about it.
So we invest in companies that are usually less than 10 million in run rate. Because the round sizes have gotten so large and the names have become so skewed in Silicon Valley that we don't call it by round. We just call it by chronology and how they're doing. And we've kind of come up with the term between post-product release and 10 million ARR as the traction gap, because the funding for that period has fallen off a cliff. And it's the most stressful time for a startup. And we measure companies along that spectrum across 4 categories: product, revenue, team, and systems. And as they grow, we coach them along the way, and they have different milestones that we try to coach them towards as they try to find their scaling and traction.
Okay. I'm also the founder and managing partner of Evangelist Capital. This is one of the first funds out of Ukraine. We invest in the early stage, late seed Series A, in the Ukrainian origin companies that go in global. We usually invest with a check $500,000, and then we do follow-ons in the company. We also have helped to fundraise our companies in Silicon Valley, because most of them focus on the US market. We love to syndicate, by the way. This is a message for the whole investors. And for those that are interested in the Ukrainian market, I just can tell just one top line figure. For last year, we had tripled the number of the capital invested in Ukrainian origin companies. And majority of that capital came from the international investors together with the local ones. So the outcome of this panel would be, to my mind, that those who have not done it yet would do it after our panel. And I'm talking to everyone in this room. If you want to find out more about the opportunities to co-invest with us, with all this deal flow, here's a book. It's called Deal Book of Ukraine, which is prepared by us, by team of Evangelist Capital. And here's my partner standing there, Evgeny Sisoyev. So if you want to get the electronic copy of it and get access to our deal flow, please see him and myself after the panel. Okay. Now, can you tell us more and what you take, where you invest in and where you're not investing and why today? Nathan?
Sure. So we're mostly looking at people that are leveraging some sort of data source in our core competencies, as I mentioned. The most successful companies that we've gotten excited about recently are companies that create their own category. And what do I mean by that? I mean that they sit in between 2 trends or 2 existing infrastructures, and they've uncovered trap value that otherwise wouldn't have been tapped. A good example of that is security deposits on apartments. Right now, security deposits for apartments, I have to put up somewhere between a month and 2 months' rent, and that's a gigantic check to write for a millennial that has no savings, and that for the landlord is also a burden because it just sits in escrow, and the float even goes back to the renters, and it's a hassle for them as well. So this company recognized that, and they turned it into an insurance premium, and we were like, oh my God, that's a great idea. So they said, hey, there's this insurance product. We know about insurance. This is a huge burden for everybody involved. And they pivoted to be something more interesting and more useful for both parties. And so that's the kind of thing that we're looking at, and it fits into our edtech, or our fintech and insurance thesis. So those are the kind of things we're looking at.
Okay, thank you. Vitaly?
I'll take the question quite literally. So we're obviously a global company, and just to step back for a second, corporate venture is a little bit different than traditional venture capital. There's a big element of strategic fit with the company. And corporate venture operates kind of in 3 different speeds. First being business unit led, where there's a commercial agreement with every single investment, where it's very much close to the business, the existing business. Business unit aligned is where the corporate venture invests ahead of where the company may be doing business in a few years. And then purely financial, where it just shares a name, but it's really looking for financial returns, much like a traditional venture. As far as kind of global picture, what I'm excited about is really these next S curves where in AI, in augmented reality, in advanced manufacturing, synthetic biology, where we'll see the emergence of the next unicorns, the next multi-billion-dollar companies that are creating new industries or completely changing existing major categories. And what's really interesting is that a lot of the engineering talent, kind of to bring it all home, is really all over the world now. So you're going to see a lot of these new technologies coming out of labs, out of university research all over the world, being born anywhere, but they don't necessarily have the resources to commercialize those projects and bring them to market. And that's really where the Silicon Valley bridge is very important, because the one thing, the secret of Silicon Valley really is about 50,000 director-level managers that have come from idea to exit. And that really doesn't exist, that level of experience, anywhere in the world. So if it's really a global play, a multi-billion-dollar company, and I'm not talking about regional e-commerce, I'm not talking about regional services, I'm talking about things that are truly new technology breakthroughs, there has to be a bridge to Silicon Valley, and that's where they scale the fastest. And that's really mostly my activity, is to kind of create that bridge, especially with Ukraine, especially with Central and Eastern Europe, where I'm 1.5 generation American, so I can kind of create that bridge and understand both cultures. So that's kind of where I focus.
Just to double tap on that, sorry.
Sure, go ahead.
As a CVC, you have the luxury of investing in things before they are mature enough to actually be widespread. For us,
quite the contrary, right? So $50 billion company, 50 billion revenue. So to move the needle and to get the attention of business units, there has to be a very direct and very obvious story, which is actually, it's a bit of a pain in the ass, I got to tell you, to convince people that have been inside of a big company for 20 years, their entire career, and they're very kind of defensive, this non-invented here problem. So there are kind of handcuffs. So there are pluses and minuses, both sides.
And that's cool that HP is doing that. And that's, in my experience, rare amongst the CVCs. So like for us, we're looking at, like, for one of our examples, as a corollary to that, like an existing company that we're the lead investor in is called Tuition.io. And they they basically redid the 401k and they apply it as employee matching for student loans. Largest debt position in the US, above credit card, above auto. And they enable employers to pay down their student debt. Help their employees pay on their student debt as a perk to get millennials into the workforce.
Pre-tax.
Pre-tax. And so that's like not necessarily a new S-curve per se, but it's a massive opportunity, hundreds of billions of dollars in market share, and they're way out front. So it doesn't have to be like, micro nano robotics. It can be, something that's very large, that's close to home.
Yeah.
Okay. But if you look at the statistics of the recent years, about the early stage venture capital, you will see the decline in terms of volumes. And my question to you, if you're now in Davos, and previously it was an economic forum, it's transformed into a technology forum if you go on the streets, right? Everybody talking about ICO. And my question to you, is the ICO is a real threat for traditional venture capitalists like you, like us, or it's something else?
So I would say, the funny thing is I thought I was coming to Davos and I ended up at a blockchain conference. It's really, it's interesting. It's interesting. So there are a couple of ways to think about it. First of all, there are typically equity rounds, at least seed rounds, in these companies well before they go into an ICO mode. And guess who's funding those? Really smart venture capitalists that are using up other people's money to get into this new category. That's one side of it. On the other hand, what's interesting is when you're buying into an ICO and you get a utility token, you actually get a quick flip, right? So a lot of times, smart investors will get in, get a 50% discount, and will sell out completely or in a good chunk at the sale, the public sale. And that could be 6 months. You can double up. A lot of times they don't float. They'll go to zero. But they can double up as well. And it creates this new model where it's actually closer to a hedge fund or kind of a hybrid VC hedge fund where you're doing these quick flips. You're no longer doing a 10-year fund. And another aspect, and something that I've explored personally, is doing a fund which is essentially off of an ICO, where it allows you as an investor to come into mid-market technology companies that will never have big exits, but you essentially have a liquid vehicle at any one given point, and you can take dividends back from those companies. So I think there will be an emergence of new hybrid financing models. But venture practitioners are professional investors. Maybe some of the tools will change, but largely the group will stay the same.
Yeah. So I think that there's really good use cases for a token when there's an established product and an established revenue model. When you have the opportunity to create an additional marketplace on top of your existing revenue stream and your business model, like take the Kodak example for digital media rights, that's a pretty useful case. However, that's the exception, and from what I've seen, and not the norm. The vast majority of these ICOs are effectively monetizing PhD theses. And if you reflect on kind of what I said earlier, where we measure things across product, revenue, team, and systems, there are very, very few PhD researchers that are able to productize something, much less establish a viable revenue model for their business. And their systems end up being hedge funds and not the product that they initially set out to build. PhD research is not always meant to be productized. There are theoretical concepts that could work, but a lot of times they don't. And a lot of the papers that are being put out right now seem to fall into that category versus the productizable category.
Thank you. Well, Vivek joined us at the very beginning. Everybody introduced themselves. I know that you're from Bo Capital, but you're also famous for some other investments, especially in sports. Could you introduce what you do and what is your current focus on investments?
Sure.
So the audience will...
Yeah, my name is Vivek. I founded a company called TIBCO, which is a multi-billion-dollar software company. But I'm better known because a few years ago I coached my 12-year-old daughter's basketball team. And Malcolm Gladwell wrote a book about it called David and Goliath. And I ended up falling in love with basketball and bought the Warriors, and then we turned them around and sold the team, and now I own the Sacramento Kings. And so I'm better known as the owner of a sports team.
Yeah, thank you. The questions that are raised, actually, the decline in venture capital in the early stage in recent years, and the ICO that everybody is talking to today in Davos, how is it going to affect the traditional venture capital? Is it going to affect some way, in your opinion, or is just supplementary, or what's going on, in your opinion?
Yeah, there are actually, and I was listening to the earlier speaker, and at the Sacramento Kings, I'm actually applying some of that. So we're considered the most technically advanced team in any sport, and we have an arena that's the most sophisticated arena in the world. And one of the things that we're starting to do is use loyalty points to do sports betting. Script and blockchain and ICO in doing that. I think that I think we're actually at a very exciting time in terms of venture capital.
Okay.
We're transitioning into the digital era. So modern civilization started with the agricultural era, and land was the raw material. It was the age of the artisan. We went into the and energy and steel were the raw materials. Now we're entering an era where the world's largest bookseller has no bookstores, and the world's largest taxi company owns no cars. And so it's really the age of information and data and imagination. And there's multiple trillion-dollar industries that are emerging out of this digital era. So it's a really good time to be in venture capital.
Oh, sure. Everybody is welcome to join us in venture capital. But as Vitaly has already mentioned, like half of ICOs last year was backed up by the traditional venture capitalists, which actually gives the more confidence for other investors that are not in this sphere, and to invest more in ICOs or companies going for ICOs that actually been backed up by professional VCs. So in my mind, it's not going to disrupt the venture capital in a sense, but rather to be kind of complementary as a tool to raise capital together with venture capitals that actually invest in equity, invest in the process, etc., etc. This is my opinion on this one. Would you agree with this?
Yeah, I think absolutely. I think that it's, and I ran a public company for quite some time, and it's become very hard to be a public company. So there's a lot of companies. So I think there's a need for continuous funding. So I think there's a role, there's a big role actually.
Okay. Well, in the Ukraine house, we had the two panels that were just overbooked regarding the blockchain. Raising capital right now in new funds, and if you are, tell us what is the experience to raise to raise capital from LPs and traditional fund. What's the outlook today?
We're always raising, just like any startup. VCs we're early stage VC, so we're always raising capital. But quick anecdote, you and I were talking about this yesterday.
Yeah.
Yesterday. My roommate is in cryptocurrency and invests in quite a few ICOs. And he found out about this particular ICO he was interested in, and he was able to put together a SPV for it in the several $100,000 range in 4 hours.
4 hours. Wow.
So the market is liquid.
So what you're saying, if you extend our panel for 4 hours, we're gonna raise capital right now. If you talk about that, right?
Yeah. So
okay. Good.
They effectively
From
raised
you
the
guys.
seed investment in 4 hours. For traditional venture capital, obviously VCs are conservative, but LPs are considerably more conservative because their marriage is a lot of time over multiple funds. So for fund life cycle, 7 to 10 years, with a liquidity of sometimes even 12 to 15 years. And by the time they even know if the first one's good, they're usually already committed to the second one. You know, those conversations are a lot longer. You know, the marriage there is, the dating is longer.
But there's still appetite to invest in traditional venture capital funds.
Absolutely. I mean,
Yeah,
my GPs have all been investing in it for the last 10 years. One of my GPs was the CEO and founder of Agile, which he took out for $1 billion. One of my GPs was the CPO of Siebel Systems. So they've been working for a long time, and they know what they're doing.
Right, but what about LPs? I say newcomers? It's the new people that invested in the funds, or it's just people that have been doing this for years?
Some new, some
How
old.
is it?
It's, you know, our LP mix is endowments, family offices, sub foundations. Yeah, there's still appetite.
Any family offices out there?
Oh yeah.
Okay.
Yeah. Oh yeah.
Good. Vitaly?
So I think there's the best advice that I can give to founders to raise their round very quickly is to create momentum and control the clock. And what you're trying to do is basically broadcast a message that this rocket ship is fueling and is going to take off with or without you. And it creates this fear of missing out. So if you zoom out and you look at the macro conditions right now, there's insane hype about crypto. And most people, 98 to 99% of people don't truly understand the technology. They have this fear of missing out because they're hearing that this is a new gold rush. And family offices, including, and some corporates I'm actually even seeing now, are looking towards professional managers, investment managers, to give them guidance, and they are very, very willing to much quicker now write a check and commit to a fund looking at these new S-curves because they're fearing of missing out. And they're not really in the inner circle, so they can't really get into these deals themselves, or they're going to be the fools catching the knife at the end, usually, if they're trying to do it on their own. So they are looking for professional investment managers that can give them the guidance to get them into the right deals.
Would you look at the blockchain cryptocurrency-related sectors or companies to invest in? And how it helps in your fundraising?
Yeah, I mean, I would look at them from two perspectives. So first of all, it's a new financial structure as far as from perspective of investment. And there are some opportunities, and there needs to be some caution. This is .com days. This is really early on. Some of these words that are really strong buzzwords right now, 20 years from now, we're going to be watching old video clips, and we're going to be cringing like we're looking at, when .coms first came about, right? You don't really hear the word .com much anymore. You probably won't hear Bitcoin so much in 10 or 20 years. So, it's a really interesting space, but I'm like cautiously optimistic. I'm really waiting for the crash, the very quick recovery, and the second generation of companies that are much firmer footing, much more practical in use case, and can actually generate revenue, not just essentially a Kickstarter on steroids.
Okay, so
we're waiting for regulation.
And you're waiting for the second wave, according to Vitaly, right? Everybody crashed, and then you just jump on the second wave, right?
More or less. Some things will survive. And the interesting thing is that if you look at this curve, it's moving about 5 times faster or so than .com days. So when .coms, 2001, the crash happened. I remember it fondly. Vivek probably remembers it fondly as well. In Silicon Valley at that time, there was no traffic on Highway 101. It was great for about 3 years. And then
you could get
things
to San
came back.
Francisco faster than
Yeah, I remember those time. Yeah,
It
absolutely.
took 20 minutes to get to the city. Now it
Exactly.
takes an hour and a half. So the crash will probably happen. Everybody's expecting it. But then the recovery will come maybe 6 months later. It will be quick.
Well, I just wanted to say that, that there's actually multiple trillion-dollar industries out there. So while everybody's talking about things like crypto, there's amazing things happening in the world right now. And so I'll give you, a few examples. And so, and I have a partnership with the University of California system where I get first dibs on everything that comes out of their 10 campuses. So I'll give you multiple examples. One is gene editing. So there's a technology that didn't exist 5 years ago called CRISPR-Cas9. So you can literally cut and paste gene sequences. And so we'll be able to eliminate genetic disorders. We'll be able to create new plant forms. And so you want to engineer a peanut that doesn't cause allergies. It's going to be a trillion-dollar industry. Another example is new materials. So there's a material called graphene, and it's a atom thick, and it's the most conductive material there is. And it'll be used for batteries, for screens, for cell phones, and you'll be able to pour salt water and clean water will come out of it. So this is yet another example of a trillion-dollar industry. There's another area that I'm investing in is, believe it or not, bacteria, gut bacteria. So scientists now believe that just about every disease can be traced to gut bacteria. And so studying the microbiome and understanding how that cures disease. And of course, there's deep machine learning, which applies to everything. But I think everybody's talking a lot about crypto, but in the meanwhile, there's a lot of other opportunities out there.
Exactly, but are you raising capital right now for your fund?
I have a partnership where basically I put my own money in, and I've had the University of California has put in basically a blank check. So I don't need money, but
You sure? Because the other person says we always raising capital. Okay, I see for the first time in my life I see venture capitals that don't need money. Okay, it's interesting pitch.
Well, there's a lot of money out there. I think that the trick
exactly
is
in this room too.
Yeah.
Yeah. Sorry.
No, I think that what entrepreneurs need is smart money.
Right.
And so they need people that can help them. And that's kind of the role that I'm playing. Is I've grown multi-billion-dollar companies, and so I can help entrepreneurs grow their businesses.
Okay, thank you. All right, let's move on and actually focus on the main topic of today's discussion. Where you see the next unicorns? In your opinion, where should we invest? On where we should build companies that are going to be unicorns soon? For those who don't know what unicorns are, it's a billion-dollar valuation companies.
Sure. You're saying where geographically or?
No. Where in what sectors, subsectors?
Oh, sure, easy.
But geography is also good. I know you're talking about Ukraine, but anyway.
Yeah. So I look at four primary categories that I believe are the four pillars of the next industrial revolution. That's AI, augmented reality, advanced manufacturing, and synthetic biology. And these four technology categories will flip major industries. So healthcare, $3.5 trillion industry in the US, food production, somewhat related to that, manufacturing, transportation, logistics, and finance industries. So those are really the areas that have huge opportunities. Blockchain, but you're not going to put all this on the blockchain. It's relevant maybe for finance, for insurance, for certain things. And there's certainly opportunities that will be created for new categories. But those technology areas are already starting to pay dividends, where you're going to see a huge leap in, for example, food production, or up and down the healthcare stack from clinical all the way to the back office, creating efficiencies, and that's a major area. As far as kind of geographically, like I said before, I'm a really big believer that a lot of this will come out of labs and universities as far as core tech in Europe, in Canada for AI. The Toronto-Waterloo corridor is probably strongest in the world between the two universities. In Southeast Asia and Vietnam, fantastic population of engineers, which is a little bit under the radar right now. Ukraine has an opportunity to be very, very big in this, and especially in agro-tech, which doesn't get enough attention as well, and that's a major category. Obviously, everybody's got to eat. So again, it's going to be a combination of these technologies coming out of great universities, great research, and then finding markets and business partners, essentially people that can make, commercialize this and make businesses out of this. That's going to be important.
Nathan, where do you see the next unicorns coming from?
So I think a lot stems from mobility.
Can you specify mobility?
Yeah. So to dive in there, so when you look at what happened with the hardware that went into cell phones, the cost, unit economics, and cost of the cameras and the sensors, they all fell off a cliff. And now it's actually, you can actually get really good cameras for dirt cheap. With robotics, which has been around since really, kicked off again in the 2004-2005 DARPA challenge, when they started the autonomous car stuff, the prices of all the actuators for robotics, et cetera, stayed really high because it never caught on. But with the adoption of deep learning and the compute power increasing and algorithms getting better, et cetera, computer vision, you see now the hardware sensors for autonomous cars plummeting as well. And when you see the number of miles driven, this was a number from Dara the other day, CEO of Uber, going from 1.5 trillion miles driven to 4 trillion miles driven globally by 2030, I think he said, 2035. There's a lot of opportunity for these costs to continue to drop, which gives rise in more industries like robotics and other massive companies. So the most recent acquisition that was major was KUKA getting bought for $5.5 billion a couple years ago. And then the other one that I think is massive is workforce retraining. If you read McKinsey's last study, they believe that AI will displace $5 trillion worth of wages. And the reason why I say it like that is because it's not jobs, it's tasks. And so if you think about what you do during the course of your week, about 55% of your week is spent doing awful things, things that you shouldn't be doing, like adding context to your CRM or blah, blah, blah. And that equates to approximately $2.5 trillion in wages. And if you can augment that and retrain people that are in those jobs to do things that are more creative, et cetera. So I was giving a talk earlier, 220,000 product marketing jobs open. We're investing in a company that Greenfig that does that. 690,000 product management jobs open. 435,000 customer success jobs open. Things that require people in the loop. There's a lot of opportunity to redistribute workforces, and each of those are several billion-dollar companies. So the people working on that will do great for both society and for their returns.
Okay, so this way you invest early in these sectors that you mentioned, right?
Greenfig we actually started internally. So we actually from last year's Davos came back and we actually established that thesis and then started that company. And then for mobility, there's obviously like the hardware costs as well, but for this whole thing to come to fruition, there's not just the hardware, there's obviously the mapping and the fleet management. And as far as mapping, there's all kinds of ways to do 3D mapping, et cetera. We're investing in a company called What3Words that remap the world to 57 trillion 3 meter by 3 meter squares because 4 billion people in the world today don't have addresses. So there's a lot of room left to go in a lot of these verticals.
Okay.
Can I add a little bit
to
that?
Sure.
I think transportation logistics is actually really fascinating how it's going to change. There are two major technology trends, electrification and autonomy. And, as it is, we always kind of overestimate the first order changes, but we really drastically underestimate the second order changes. And with these two trends, car ownership is going to change, the insurance, concept of insurance is going to change. It's going to be a complete transformation, not just in, we have cars that drive themselves, do they have a steering wheel or not, but these entire markets that are related are going to be completely transformed. So that's going to be fascinating.
Yeah, I just wanted to offer a slightly different perspective. And so I don't really believe in looking for unicorns. And, I have been involved with or created multi-billion-dollar companies and have friends with guys who have. And I don't think most entrepreneurs go at it and say, look, I want to create a company that's going to be worth $1 billion. And so the way I look at it is I'm looking for what I call social unicorns. And so I'm looking for companies that have the potential to touch 1 billion people. And so if you can touch 1 billion people,
it's going to be a unicorn anyway.
It's going to be worth a lot. And I think that's just the wrong mindset. And I think it's kind of poison Silicon Valley. I think people are too driven by that, and the great entrepreneurs are really more trying to create things. And so I see some of them were examples that I gave earlier, but there's going to be the first trillion-dollar companies coming out of some of these new areas. And so whoever cracks the code on making graphene cheaply will probably end up with a trillion-dollar company. Whoever, cybersecurity is a huge problem. As we go to the Internet of Things, and 15 years from now there'll be 1 trillion devices hooked up, and you can hack into just about anything. And the companies are really legacy companies. They're using kind of a pattern match with a known set of viruses, and somebody's going to crack the code on that. So that that's going to be a huge opportunity.
Right. But I asked the question in a sense. Some of the sectors are already red ocean. You just don't go there because it's so overcrowded. And to my mind, so much hype about the AI, blockchain, etc. Because it's the early stage, and everybody understands the potential, right? And
yeah, but see, let me
but
disagree.
It's still early.
Disagree with that on that as
Sure,
well.
I'm a moderator. You can disagree with everything.
So people were making shoes for thousands of years, and Phil Knight said, "Hey, I'll use a waffle iron to make a new kind of shoe," and I used to be, and that's become a huge company. And my friend Steve was, he said, "I'm going to make a phone," and people were tripping over themselves making cheaper and cheaper and cheaper phones, and he said, "Not only will I make a phone, but I'll make it a lot more expensive than all the other phones." And within a few years, the iPhone business was worth more than Microsoft and Google combined. So I think that every single industry can be disrupted. I don't think anybody is...
Despite of red ocean, like you just mentioned, the cases, right, that you still can disrupt the traditional industries with the competition, with
That's right.
latest. Okay, it's an interesting way to do it. Exactly.
I mean, if I can add to that, I mean, it's really about finding these new S-curves of technology that allow us to solve the same boring problems, but 10 times faster, 10 times better, 10 times more convenient. And once in a while, we discover some new opportunities. But largely, we're solving the same old problems over and over again.
Yeah, I'll give you an example. Like a friend of mine just started a company, and I saw while I was in Davos that Masa-san just invested almost $900 million into the company.
Oh, Katera?
Katera.
Yeah. Brad Knight was my boss.
Okay.
Okay, good.
Yeah, so Michael Marks and Jim Davidson started this, and their whole notion was that they're going to do construction better, faster, cheaper. Yeah. And there's gigantic construction companies around that have been doing it for a long time. Yeah. And these guys have come and said, "Hey, we'll disrupt it and we'll do it better, faster, cheaper." And they've been, in just a few years, they've actually been very, very successful with it.
Yeah. And Brad, their CEO, was the former senior ops at Flextronics, just knows it cold. And
and Michael Marks was the Flextronics.
And he was the CEO,
my friend.
exactly, yeah. It's a great company.
Yeah.
Okay, good. Actually, I would like to open the floor for the questions, but while we're preparing for that, I just probably will start with my first one. What the Ukrainian origin global companies do you know? Maybe you kind of invested in some or just looking at it. What do you know about Ukrainian startups and Ukrainian companies in Silicon Valley or globally?
So last year I wrote an article about Snapchat after coming back from CES, and I said I thought that they could be the biggest augmented reality company ever, but on the back of the acquisition of Luxury.
Yeah, Luxury is from Odessa, Ukraine, for those who don't know.
My hometown.
Yeah, my hometown.
And for those of you who don't know, Luxury is the company that enables you to do the filters that changes your face into all kinds of bunnies and whatever. And
who else?
And the other one is Grammarly. Oh. So
anybody is using Grammarly in this room?
So I use it because
everyone.
I'm an engineer and not a speller, so it's important for me to use Grammarly.
Yeah, they just raised the first round, $110 million last year. Good for the first raise, right?
They're holding out. They're sandbagging.
Okay.
It's almost as big as an ICO.
Exactly. Any other companies, or are you looking at?
No, those are the only two from
what you're aware of, right?
Yeah, that I'm aware of. Yeah.
Okay, good. Vitaly?
I guess it's not really a fair question for me, right?
But you was 8 years old when you was in Odessa, so you're American. You just admitted that.
That's true.
You made a joke about Trump.
I never had a Ukrainian passport. We left; it was still Soviet Union.
Yeah.
The Ukrainian diaspora, I'll say, is actually quite phenomenal. So Steve Wozniak, Ukrainian roots. Many other people, Ukrainian roots. Max Levchin, PayPal, etc. Born in Ukraine. Jan Koum, born in Ukraine. WhatsApp. So lots of people coming out of the country. You know, I've made it a little bit of my personal mission as kind of the bridge between Ukraine and Silicon Valley is to get some of these other Ukrainians, Ukrainian-born, to get a little bit more interested in the country. So there's a little bit of gap where you see a lot of, like in China, you have the sea turtles that'll go out and come back, you know, go out and learn, study, or work abroad and come back and start companies in China. And that's been phenomenal for China, but that doesn't really exist in Ukraine. The economic conditions have been pretty tough. There's been very little help from the government, from industry, because it's in a pretty bad shape. So, you know, hopefully that's the future where you're going to see a lot of these sea turtles, or I don't know, let's come up with the right animal for Ukraine. Sea bears, sea foxes. Yeah. Shh, let's not talk about that. You know, foxes, what have you. But the idea is you know, the technology talent is there. It's the most educated country in the world, and is behind a lot of products. And I'm actually of the belief, and this is a little bit of a tangent, but that the outsourcing industry is a little bit negative for Ukraine, because the engineers are so comfortable working and making great salaries for the country in these companies that they don't really have the need or the desire to go out on their own and do these risky startup things that will likely fail. So hopefully this will change over time, and there'll be a lot more homegrown products.
Vivek?
Yeah, I'm obviously less familiar with the Ukrainian market, but I am investing in a little Ukrainian company, iCity, that basically is trying to disrupt the process of construction. So right now, if you want to build something, you have to go to the city council and you have to see what it's zoned for.
Right.
And so what they're doing is they're a bunch of like rocket scientists, and they've digitized different cities, and then they've allow you to create 3D
I know this
model.
company.
Yeah.
They pitched me last week in Silicon Valley.
Yeah, so
Probably the same one.
yeah, so that's interesting, because I see that's a need.
Exactly for California.
Yeah,
for sure. For
Yeah.
sure.
And in where I invested a lot in real estate in Sacramento, and you know, they've just hired like triple the size of the you know, of the department, because there's a lot of construction going on. So
Exactly.
So, you know, I'm trying to get them to use it. And so I see that as and again, it's your point that they're brilliant engineers, and, you know, they're great mathematicians. And so it's a great place to develop products. But I saw some of this in India, where it's easier just to go work for a consulting company and do the outsourcing. And so then you're not as motivated to be an entrepreneur.
Yeah, true.
About 20, 25 years behind India as far as that goes.
No, that's not true.
Okay, we have a question. Do we have a question from the audience? Yeah, okay, we have one. By the way, Sacramento is the biggest Ukrainian diaspora in US.
Oh, is it?
Original, yeah, in Sacramento.
No, I live in the Bay Area, but I've invested. Like
But in Sacramento, I'm talking about
downtown,
Sacramento. Yeah, okay, good. Please, question.
Hi, Ian Stewart, one of the co-founders of Wired Magazine a long, long time ago. Now a private investor. So I've had Ukrainian friends, some of who were standing around me, who've been trying to get me to arrive in Kiev and Kharkiv and other places in Ukraine to invest. And I've been hearing about the mathematical and technical characteristics of the graduates that are coming out. I'd love to hear from the panel, for a new investor in the region, and we have one investor who's one step ahead of me, what would you think is a key, clear difference within the technical community within Ukraine that makes it stand out, and that means that I, as an investor, should take a close look? Name one thing that stands out that you think is worth looking at.
Good question. Thank you. Please.
I would say there's a positive and a negative the thing that stands out. The positive is that you're going to find obscenely educated people. Like on average, the average engineer has at least a master's degree. And you're not going to find that anywhere else. So you're going to find purist engineers that are really, really highly qualified. What is really missing is sales and marketing experience and Western-minded business approach to commercialize those products. So if you can if you can complement that, if you can find great engineering talent that has accidentally stumbled on something that's commercializable, and you can find the right CEO to lead that type of company on the global market, you've got a winner.
Can I just add to that? Because
Sure.
the little experience I've had, I 100% share your point of view, but an additional negative is that because they're so smart and they're so educated, there's a tendency to over-engineer a little bit and then not pay that much attention to the user experience. And I've seen other places like Estonia where they've actually done a good job with the user experience, and they seem to have built that capability up.
You weren't here for this, but for the ones that were here earlier when I was talking about how we measure things across product, revenue, team, and systems, the majority of pitches that we see are 37 slides of product, a miracle occurs, and then there's a billion-dollar company. And those teams are usually made up of really super deeply technical people that understand their problems better than anybody else. But in the context of what my fellow panelists have said, they don't think about what additions to their team they need to add to actually scale a revenue model and be outward-facing and go build a business that's viable.
Yeah, there's actually a big problem with being a little bit too smart and thinking they have all the answers without actually going out to the market and iteratively developing a product that customers will accept. Because sometimes they're too smart. They will understand the industry better than their customers, but it doesn't matter because the customers are making the purchasing decisions. So they have to sell them something that emotionally the customer wants and they think will fill the gap. And they don't really have that introspection to connect the dots. So apply caution.
Well, in one word, they are hungry for success, very passionate, and we invest in that energy. We invest in the people, not tech. So we invest in the people that could use tech to build the global companies. And for Ukraine, you have two choices. One is to leave the country, and the other choice is actually to build global company out of Ukraine. And because you see so many success stories, and Nexus, by the way, last year we had 5 of those, it's become a role model for all techie now build global company out of Ukraine. This is what we invest in. Is that passion, is that hungriness, and for the success.
Yeah, I just wanted to add one thing though, because I think, and I have a left brain education. I went to MIT, went to Harvard Business School, and I'm an engineer. But I think that right brain thinking and the right brain education, as in the arts, is also going to be important in the future. After all, Steve Jobs was, he studied font, calligraphy. He studied font design. So I think that as you think of education, you can't ignore kind of the right brain side of it, even in places like Ukraine.
Okay. Do we have one more question from the audience? Oh, we have one. Yeah, please introduce yourself.
Yes. Hi, my name is Jan D'Alessandro, and I have a consulting business in San Francisco where I work with entrepreneurs, helping them with their digital and partnership strategy. I'm a lawyer by training and have had many years at AOL and several other. I was the head of business development, general counsel for several venture-backed startups. But so my question for you is, I understand you're all investors and you invest in companies based on the size of the market and the team and the technology, et cetera. But what do you all think about the fact that only 3% of venture-backed companies are run by women? And what are you each individually going to do to change that, to make the numbers better?
I'll take that one. So I think it's...
You're brave.
I think it's a really big mistake. I personally don't know investors who actively discriminate against women founders. I really think more than anything, it's a top of the funnel problem. There are not enough women that are motivated to go into technology and entrepreneurship. They kind of, at the college level, if you look at the numbers, there are a lot of women, 50-50. In engineering, I think less so. In some, double E, ME, etc. Unfortunately, although at high school level, women have better grades in math and science. So then by college, something happens, and then further something happens, and then unfortunately, I don't know, maybe there's not enough support structure to motivate women to kind of have the bravery to jump into entrepreneurial pursuits. So I think that's the area that I would focus, and then ultimately. I know for a fact, and I've read lots of studies, and I evangelize and tell anybody who will listen, is that women make great managers and actually return better capital, statistically. So, I want to be positive and believe that it's a systemic problem, and there's not too many, kind of old mentality, old school mad men that are discriminating against women founders. although I hear anecdotally that that does obviously exist. So I don't know the exact answer, but I think it's somewhere, the impact can be done somewhere at the beginning of the journey, around college age. That's where it needs to be focused.
But I do think that, like, I really believe that the best leaders in the future are going to be women. So we're entering this new era where the leadership style is shifting from kind of a hierarchical command and control style to more of a networked empathy, consensus, bring the best out in everybody style. So it's going from kind of a Sousa marching band to more of a jazz band. And so I believe that women are much more effective at that. And I've invested in a bunch of women-led companies. And also I think that because the user experience and other elements are just as important, some of the companies I've invested in, the woman didn't have a technical background, but was entrepreneurial and had a vision for the market. So I think that'll be less of a factor. So I really believe that 20 years from now, the majority of leaders will actually be women.
Good. Nathan?
Yeah. So on average, so your number was 3, our number is 25% women founders. Our firm is disproportionately in our portfolio. And also, I mean, the stats inside venture capital are also abhorrent. But as far as our team is concerned, one of our 4 GPs is women, one of our 2 venture partners is women, and one of our 2 junior people is women. So that's 3 out of 8. So we're trying. We're trying.
Yeah. I just want to share with you one fact. The Ukrainian House is done for the first time by my initiative historically. We have an org committee of 7 people. I'm the only man. Okay? It's just a fact. So we made it happen with the 6 women and myself, Ukrainian House. So this is just answer to you.
So you're the token.
What's that?
You're the token.
Yeah, right? Yeah. Exactly. We don't, but we will. Just we will. Absolutely. Yeah. But to my point, they're capable of everything, and nothing is impossible, right? That's it. And by the way, the executive director of Ukrainian Venture Capital Private Equity Association that holds 47 members, Olga Afanasieva, by the way. So she babysits 47 members in our association. So that's a fact. All right. Yeah, guys. I'm not sure if you had time for maybe one more question, or we should wrap up. Okay. What is your takeaway? Just a few sentences for everybody from this panel. Nathan?
As a recovering athlete, I wish I owned a sports team.
Yeah, we have one on the panel. Yeah.
And there's so many fun problems, both far-reaching problems like the eventual use cases that get deployed in blockchain, to really crazy problems like gut bacteria. The Zymergen guys are here floating around. To traditional problems that affect big businesses today, but in addition to problems that have yet to be uncovered that are just really structural issues. I mentioned a few, like student debt, addresses, that are equally large problems we're solving.
What, Vitaly?
So I'm very bullish on venture. I'm very bullish on the future. I think the next decade is going to be incredible, and I think that Silicon Valley is not the only game in town anymore. And I'm the Silicon Valley guy here. So I'm bullish on the rest of the world, and I think we're going to see great companies, more great companies, increasingly more, born outside of Silicon Valley and utilizing kind of what was learned and the approaches and the frameworks to succeed. And I mean, the example is China as a market and the insane pace of things developing there. Hopefully, we'll see more of that developing at that kind of pace in Europe, Central Eastern Europe, Ukraine, etc.
Okay. Vivek?
Yeah, no, I think the next 10 or 15 years are going to be the most remarkable in human history. I'll go out on a limb and say that we've hit the point of exponential evolution, and things like deep machine learning have hit a tipping point, and it changes everything. And if you think about what Ukraine has, you have the raw material that matters the most, which is a highly educated, motivated set of people. So.
Yeah, we in people business, right?
Yeah.
At the end of the day,
Yeah.
absolutely.
Yeah, well, if you think about like 20 years ago, all the top companies, their assets were in the ground. And now if you look at all the top companies, Microsoft, Google, Amazon, their assets are data and people. So I think it's a good opportunity for Ukraine.
Exactly. I've been doing this for 15 years. I'm a great believer in Ukraine. And I just gave you the facts. For the last year, the number of investments and the total volume have been tripled in Ukrainian companies. And this is just a fact. And this is the fact why we have a Silicon Valley-based VCs join the Ukrainian Venture Capital Private Equity Association, because they want to have first-hand the deal flow, right? And the message too is very simple. Join us, co-invest with us. So UVCA is welcome for any new members. If you want to know more what we invest in and about our deal flow, just come to see us. This is why we set up the Ukraine House in Dallas for the first time. Please co-invest with us and make the Ukraine great again. And yeah.
Too soon.
New Ukraine.
Pow, pow, pow.
Okay, New Ukraine. And to that point, probably you saw the latest Citibank research that Ukraine in top 5 in cryptocurrency. That's just a kind of wake-up call for everyone, okay? And that is just the beginning. So please join us at the very beginning, and let's change the world, as Vivek said, and we're going to be successful. And come to Kyiv any day, okay? Just don't call, just come into our offices. Thank you. Have a great day. Thank you. Join us. No problem. It's good that I told you.
Yeah, that's right.